All right, good afternoon now, folks. We head towards another week of trading on Monday, the 22nd of January. Let's have a flick across the calendar at a raft of central banks out over the course of this week. The Bank of Japan in the morning, the Bank of Canada, should I say, on Wednesday, the ECB on Thursday, and also then inflation figures from the US on Friday. We'll have a quick flick across the charts as well. Some interesting moves towards the back end of next week, which could help us isolate some direction into this week as well. But Bank of Japan, no change expected on any of their policies to do with the interest rate, to do with bond purchases, or where they want yields. That is all likely to remain the same. But you have to keep an eye on these Bank of Japan decisions now, as markets are expecting them to hike interest rates at some point this year. A lot of market participants may think it may come in their April meeting. Now, we've not had that suggested to us by the Bank of Japan. I've had a couple of officials out saying it is a possibility, it's something they will consider, but obviously they're going to say that. Do they come out and tell us that we are going to raise interest rates at some point this year? I'd say that's probably more unlikely, or not probably, that is more unlikely than likely at this meeting overnight. But if they are going to raise interest rates at some point this year, they are going to have to come out and tell us at some point. The time in which they will tell us is most likely to be at some sort of interest rate decision. So definitely worth keeping an eye on the Bank of Japan. If they do come out and suggest something more along the lines of raising interest rates, that should be massive strength for the Japanese yen, and it's definitely something we can jump on the back of to try and make some cash for ourselves. So as I said, is that likely to happen tonight or tomorrow morning, should I say? Probably not, but at some point one of these interest rate decisions is going to provide some good solid trading opportunities on the Japanese yen. Bank of Canada then on Wednesday, they did suggest that the measures that they had taken back in the December meeting, this suggested that the measures that they had taken were having an effect. They were curbing spending, reducing money supply from the economy, and also getting price pressures under control. Now, we had inflation from Canada last week, which did show a slowdown over the month of December. It's minus 0.3 month over month inflation print from Canada. So this inflation continues to come down in Canada. They did suggest that if needed, they would likely raise. They were able to raise interest rates again if needed, but price pressures continue to come down, and as long as that happens, there's no need for them to hike interest rates. So do we get a bit of a pivot into kind of, are we done interest rates, not looking to hike anymore, likely to be a bit of a dovish response, or do they keep to the same script? I say they're probably more likely to keep to the same script, just to keep the foot on the gas. They won't want to let up just yet, but ultimately, I can't imagine much strength off the back of the Canadian dollar post BOC on Wednesday, due to the fact that what they are trying to control is being controlled. Even if they say they're looking at they're open to further interest rate hikes, ultimately, barring any spike higher in inflation, that is not going to happen. Then the ECB have a bit of an interesting one. I mean, markets expecting them to cut rates multiple times. Did suggest that was a possibility towards the back end of last year. But ultimately, this year they've had a number of central bank officials pushing back on interest rate cuts. Saying to not expect interest rate cut, or don't count on interest rate cuts, was one of the phrases that they used to describe interest rates over the course of this year. Now, are they going to stick to that script and say, no, there's still work to do? Inflation pop higher this month, or in December they're expecting inflation to pop higher over January and February as well. So I'd say, I mean, I don't think a long on euros would be the worst idea in the world over the course of this week. I mean, I'll tell you what I think about the US dollar once we get around to some charts. I do think euro dollar may be a decent long. They're likely to at least talk a good game on Thursday. I don't think they're likely to sit there and say we're looking at cutting interest rates. They're probably likely to say inflation is still a bit sticky at the moment, is likely to pop higher over the first few months of this year. Then maybe once we get into March, April, that kind of time, they'll probably shift their bias then. But for me personally, I think if they're going to keep the foot on the gas, certainly in terms of the rhetoric around interest rates, I think that brings this into focus. I mean, you got equity markets just all ripping towards the back end of last week. Markets kind of saying, okay, we're done with your chit chat about interest rate cuts. I mean, interest rate cuts being pushed back on by Fed officials, but ultimately inflation continues to come down. economic data still remains okay, inflation comes down, and ultimately the next move in US interest rates is going to be lower. They will not hike again, and markets have got through the first kind of 2-3 weeks of this year, playing along with the fact that they're kind of talking hawkish. And certainly over the back of Thursday and Friday last week, stocks start ripping, and you can see the S&P, the Dow Jones, and Nasdaq, the Russell, all enjoying some solid upside over the course of last week. Now, these popping to all-time highs again, the S&P, the Nasdaq reaching fresh all-time highs over the course of this hourly candle, brings us to look at the US dollar, and the US dollar under a little bit of pressure back end of last week. You can see your Aussie Euro, Sterling all pushing a little bit higher. Dollar Swiss, dollar yen not doing too much, but dollar CAD pushing somewhat aggressively to the downside. Bit of upside in oil over the course of Thursday and Friday as well helps dollar CAD to the downside. But yields, you can see yields, 10-year yields starting to come into lower highs. 2-year yield failing to make a higher high and kind of breaking through these kind of short-term lows at a bit of a support level at the moment. So, if equities keep rallying, and yields keep pushing lower, yields looking like they want to turn a bit, both failing to push the fresh highs. 10-year yields already taking a bit of a turn to the downside. 2 yield may also take a bit of a turn to the downside, positive for stocks. That probably makes it looks like it's setting up for a bit of a bearish week on the US dollar. If you just look at your technicals, euro dollar failing at these lows, now pushing, making kind of higher lows and higher highs over the back of Thursday, Friday, and into today. Aussie doing the same. Kiwi struggling to push the fresh lows. Sterling making higher lows and higher highs. With them being one of the last remaining central banks to not talk about interest rate cuts. Dollar CAD's failing to make, dollar Swiss, sorry, is failing to make higher highs, looking like it wants to take a turn lower. Dollar yen failing to make highs, looking like it wants to take a turn lower. Dollar CAD as well, pushing lower with lower highs and lower lows. So it's setting up for a bit of a negative week when it comes to the US dollar. Plus, if this ECB decision on Thursday, if they decide to keep the foot on the gas, certainly that makes it a pretty decent recipe for US dollars lower in this week ahead. So equity markets firmly tilted to the upside. US dollar probably, in my opinion, has a little bit of catch up to play. What do you play it against then? Certainly sterling is a good bet for a long bit of underlying strength in sterling at the moment, with them being one of the last remaining central banks to have not mentioned interest rate cuts. Also, inflation remains too high. You had labor market figures, over the course of last week did remain decent. Okay, retail sales was pretty poor on Friday, but ultimately inflation still too high, labor market still okay. That still is a reason where the Bank of England can at least talk about keeping the foot on the gas. That's a little bit different to what some of the other central banks have. So Bank of Japan, if they come out and say anything in line with being hawkish, that is a good sell on dollar yen. I think, if oil continues to push to the top side, keeps being supported by those geopolitical tensions and in the Middle East, that likely to keep Canadian dollar supported certainly until Wednesday. Dollar CAD, bit of downside is to be expected, but then you come into Wednesday, that becomes a little bit more of a difficult trade. So I think sterling's upside is a good bet for this week, and these stock indexes, these moves are pretty unsustainable. You do not want to go buy them at the highs like this. Any sort of dips, I think, and stocks are going to be bought from here on out, I think, until economic data turns sour. But all this negativity in markets over the course of this year, you look at the S&P 500, it's just basically done nothing. Dow Jones, Nasdaq, bit of a pullback in the Nasdaq, probably the best pullback to buy a dip back into. But ultimately, central bank officials trying to put a lot of negativity through markets so far this year. Yeah, some would say, I personally think those moves are slightly overcooked towards the back end of last year, but I just keep wanting to truck higher. And again, I just have a belief in financial markets that if you wake up every day of your life and just go long stocks, you will be profitable come the end of your career. And ultimately, over the long term, stocks will continue to push higher. Okay, they have weeks, months, even years where they have a bit of downside, but over the long term, stocks continue to push higher, and that's the side of the fence you got to sit on more often than not. So stock upside, I think that results in some dollar downside. These yields will, that's definitely worth keeping an eye on. If these don't push lower and they start pushing back higher again, that bias kind of goes out the window and you got to rethink, I think. But for now, I think keep an eye on these yields. Short dollars and long stocks don't seem a bad bet come the end of the week. But when the Bank of Japan, the Bank of Canada, and the ECB all come out, we will update further as we go on through the week. We will give our thoughts and opinions on how markets evolve over the next few days. But that's my kind of thought process heading into this week. Best of luck out there, folks. try and make some cash for yourself. If you can't, try and not lose too much.